Hey folks, welcome back. Can't believe we're 1 week away from being 1/6 of the way through 2024. Time's flying. But wanted to this month I wanted to highlight a product that we've all heard a lot about. The acronym is DSCR. So let's start with talking about what does it even stand for. DSCR is debt stands for debt service coverage ratio. First and foremost, this is specifically for investment properties. The nice components to it is that they're not looking at the borrower's tax returns or income. All they're simply looking at is the proposed mortgage payment and comparing it to the proposed rent. And what they're looking for is what we call a 1-to-1 ratio. So as an example, if the proposed mortgage payment is $3,000 a month, and the proposed rents are $3,000 a month, then you have a 1-to-1 ratio. If let's say the proposed mortgage payment is $3,600 a month and the rent comes in at $3,000 a month, then you have less than a 1-to-1 ratio. You have like a 0.8-to-1 ratio. And some companies will still do that, but they're going to increase the interest rate, which further widens the gap between the mortgage payment and the proposed rent. The danger behind the program is that technically it can go up to an 80% loan to value, but realistically, it's almost never going to fly, at least not in Southern Nevada. Anyone putting 20% down at a rate of 8%, the mortgage payment is going to far exceed the rent. And unfortunately, the buyer won't know this until the appraisal comes in. So where the underwriter gets the proposed rental information is off of the appraisal. So the buyer is now under contract for anywhere from 1 to 2 weeks. The appraisal comes in, the rental analysis comes back. And at that moment in time, only then does the buyer truly know how much they're going to need to put down in order to meet that 1-to-1 ratio. So my suggestion is if you're working with a client that's approved with the DSCR, make sure that they're putting a good 40% down. If they're putting less than 40% down, it's certainly a recipe for, disaster as far as the loan process goes, because you won't know that this loan doesn't qualify until you're, potentially 2 weeks into the transaction. Now, the bad news out of the way, in terms of how much the buyer needs to put down, which is probably going to be close to 40, maybe even 50% down. It's a great program from there on out. The rates are really good. They're competitive with conventional interest rates, and the process is easy because there's very little documentation. But just make sure that the buyer is prepared for a substantial amount down. If it ends up where they only need 30% down, then great. But they want to be prepared for 40% down to participate in that program. The next, we take a peek at the financial markets and how it performed over the past month. And so you may have heard, but you've had really good unemployment report or job growth report, and a not so good inflation report where inflation came in a little hotter than expected. So the end result is you have stocks doing fairly well. The S&P is up roughly 400 points on the year, which is a little over 8% in just about a month and a half. So that's pretty significant. But the bond market is not faring so well. The U.S. Treasury is up 0.6% in 2024. So it started out the year a little under 4% and is now up around 4.3%. And mortgage rates have gone, the average 30-year fixed went from around 6.6% up to 7.1%. So not exactly what we needed. It's a step back, but that's just what's going to happen throughout the year. I think we'll see the staircase of interest rates staircase down, but there's going to be some moments in time where rates jump up temporarily. If anything, it's just another indication that someone's interested in buying a home can't time interest rates. You buy when the timing's right for the buyer, and the rates sort of chips fall where they are, and ultimately you look to refinance and get the payment lower down the road. Speaking of sales, January sales report was released by Lawyer's Title. It looks like January starts out the year up pretty significantly from January of last year when we're talking about number of transactions. It's looks like there was a total of a little over 2,300 transactions, which is up from about 2,000 transactions in January of 2023. So it's a healthy increase in number of transactions, about a 17% increase. And the median priced home dipped 5,000, virtually nothing, 1% from December of 2023, but it's up 25,000 or around 6% from the same month of 2023. So it's median priced home is up about 6% year over year, but down about 1% compared to December. So January off to a good start. Inventory seems to be heading in a healthy direction as well. According to the report, Lawyer's Title, there's a little over 6,000 single family homes on the market. And when you factor in that there are 1,700 single family transactions for the month of January, it translates into a roughly 3.5 month supply. Cash transactions consist of about 33% of all sales. So certainly not helping the loan officers struggling with the lack of production that they're used to, but certainly a healthy sign for the housing market in terms of value when you have 33% of the home buyers paying cash today. That's all I've got for the month. Feel free to message me if you have any questions on the content or feedback. If you have feedback on if this information is helpful to you and your clients or not, I'd love to hear from you. Have a great month.